Hi everyone, welcome back to Be Rich. It's me Vinod here, and hope you had a great day and you're ready to talk about some company news and stock related news to the American market. But before I get into that, I thought I'll quickly walk through the comments from yesterday's video and give you my thoughts on what you guys were sharing. Thanks, Ramnath. You have said this is a great initiative and to keep the stock series going, especially on the American stock. You can thank Anand because Anand was the one who's leaned on me hard and said, make sure we talk about American stocks on Be Rich as we talk a lot about Indian stocks on our sister channel. He said, let us keep this different. So this is all thanks to Anand. Same way, Karthik, you're welcome. We will do Japanese stocks also. Shashwat has been doing research on another Japanese company and we should come back soon with that videos also. Azhar has said Pepsi is losing market to Dr. Pepper in the US. Yes, I do agree. Pepsi has kind of lost its way in the cola war, which is what even Raja Vignesh is saying, that he would choose Coke any day over Pepsi because of the brand. Though Pepsi is at a medium, below the median PE. He says Pepsi is too diversified and lost the cola wars, and Dr. Pepper's overtaking that spot. Yes, purely in terms of where Pepsi is in comparison to the colas, I would say you're right in this account. But, I would not write Pepsi off. They are diversified. Maybe they shouldn't have diversified and they should have stayed and focused on colas, or maybe the diversification in the long term would be a bet which will help them gain ground and take on Coca-Cola. I don't know. We'll have to wait and watch. But I decided to do Google today for the simple reason I liked what Divakaran has said. He said, nope, won't buy. Long term, it's a safe option, but he won't be buying it. He's asked for a video on Google. And I thought Google, when we're talking about long term bets, is something we should talk about. And someone did ask saying, understand your concern for US people. Same way in Indian people also can pick Indians. You can pick Indian stocks and analyze. Yes, we do Indian stocks. That is there in our sister channel, Money Pitch. And Anand talks about a lot of Indian stocks there. So if you're interested in Indian stocks, I suggest you catch Anand there. But if you want it in English and me talking about it, you can catch me on Instagram. On Instagram, I am trying to do more Indian stocks and Indian stock related news there. And you can come and join those conversations there. So as Divakar said, I thought today I'll talk about Google. Google everybody knows about. It's not Google anymore, of course. It is called Alphabet. It is listed as Alphabet in the American stock market. And currently the price is at 166. It is a company which a lot of you know already the history about, and I'm sure you know what Google is. So there's no real point in me building up like what I was doing yesterday, saying what is Google and diving into that. But there are some interesting information which I wanted to pick apart and discuss with you, which is where their revenue stream is coming from. So there, I thought I would spend more time on today when we're talking about Google and see, is it safe, this kind of revenue stream? Yes, the past is there to look at, but the future, is it the same? All taking in AI into account. So before we get into that, Google is priced at $166 a share. Discounted cash flow would say it should be around 161 is at value. Intrinsic value says around 153. So if you look about it, Google is right about in a very reasonable price. During all through 2022 to 2023, it was at very, very great valuation. So if you were buying Google from 2022 to 2023, where the price was at a high of $129 and it even went low as $88, believe it or not, you would be seeing great returns in Google. So if you've been consistent in Google and you've been buying Google for some time, respect to you and admiration to you that you managed to pick it up at a great price. But if you are still haven't bought it and you're looking at Google, I would say Google is something you should be looking at even now. For the simple reason, let's look at quarter one, right? Quarter one, their earnings are up 12% year on year at 90 billion. Net income at 34 billion is up 46%. Earnings per share is $2.8. Operating margin has improved by 34%. And segment-wise, if we look at breaking it down, Google Services has contributed $77.3 billion, which is up 10%. Cloud services is at $12.3 billion, and that's up 28%. So there's a strong demand for cloud services. Where it gets really interesting is Google services. In Google services, we have ad search, and you have YouTube ads, and you have Google network ads and others. So if you look at the Google ads, right, we are looking at around 50 billion, which is 65% of their revenue comes from Google ads. And YouTube ads is around 9 billion, which is around 12%. And Google network ads is around 7 billion, which is 9%. And the others around 10 billion, which is around 14%. So if you see, the major growth year on year has been on the ads. The ads in search has grown by 10% year on year, and the YouTube has grown by 10%, while the network has actually come down by 2%. So looking at it, 77 billion from services, up 10% year on year, is all from ads. But that is where the problem is also. There's a dependency on ad revenue in Google, which is 75%. We have seen history in looking back at hindsight, of course. If you look at the media, newspaper media, TV media, all kinds of entertainment media, where majority of the revenue was from advertisement. These companies were doing great when there was no disruption in the business. When the business was rock solid, like newspaper. Even in India, you can look at all these big newspapers which have all but disappeared. Even in the US, it is because they were built on ad revenue. And because of the amount of money they were making on ad revenue, they were able to hire quality talent. They were able to structure their business, build a brand value, and build a reputation. And that whole industry was based on that. But once the domino fell and that stream of ad revenue disappeared, things fell apart very fast and very quickly. Some of these so-called big media houses have disappeared completely. Some of them are in their last legs. So the question is, with 75% of their revenue depending on ads, right, and Google dominating search, is the question, are they over dependent on ads? This is where there are two sets of arguments. AI has come in now, and a lot of people feel that AI is going to be such a huge disruption to search engine and search environment that people do not need to use a search engine anymore to get information. That means you don't need to go to a search engine where type in something and then you have a list of websites or list of answers and queries, and then you click on that and then you find the information. People nowadays don't have the patience for that anymore, thanks to social media engineering, that our attention spans are so short, right? We can't even read books. We just want summaries from now on. Even we use ChatGPT to summarize books which are coming out, or tell us the essence of the book, which part of the chapters we should even bother reading, even if you want to read. When we're at that level, that Google's going to be suffering due to this, and there's going to be a huge drop off in their ad revenue going forward. That is one school of thought. There's the other school of thought, which they say Google itself is a major player in AI. Google Gemini, if you want to say it, whichever way you pronounce it, is a huge player in AI, and is already dominating the market. And people do not realize how powerful Google is in AI, because everyone's so focused on ChatGPT, they're not able to see how Google has the major advantage compared to ChatGPT. Here the argument is, Google already has the existing ecosystem to give you the AI and permeate AI into all your services without even you knowing it. Most of us use Android phones, and Google Gemini is going to be there assisting you, doing a data harvesting for you and being present with you and offering the services, what I'm saying there, through Google. Google services such as, what I'm talking about, office services, online services, workspace services, is all going to have AI plugged into it. And Google's search engine itself is being driven by AI. Of course, all of you have recently seen, when you search anything in Google, there's a summary coming up on top. The thing is, what everyone's saying is Google has slowly started pumping ads into that. So when you search for something and AI gives you an AI generated summary or an answer, let's say if you say travel, which is the best credit card to take to Japan when traveling, Google will take sponsor links and put it into the AI search engine answer itself, which comes in the top as a summary. And there, is a premium segment to advertisers where Google is going to be leveraging that and making more ad revenue. So that is where the argument is. So maybe AI will be helping Google to generate more ad revenue going forward. Maybe AI will not be able to help because maybe we'll prefer more automated replies, and maybe ChatGPT and other AI will start eating into this ecosystem where Google will start losing ad revenue from traditional ad revenue medias. This is where the question lies as a value investor. Because if you look, I'll ask Rupesh to throw up on the screen earnings, the annual earnings from 2021, 22, 23, 24, and the projected earnings, it's all up, it's all positive, and they're beating the estimates most of the time. If you look at the capital structure, which Rupesh will put up on the screen, there also the value of Google is fantastic. And if you look at ratios from 2020 to 2024, it has been consistent in its PE valuations being very attractive compared to the rest of the peers in the market. Google at PE ratio of 18, while the rest of the peers are close to 50, it stands amazing in terms of value. And if you look at the segment-wise, which Rupesh should have put up on the screen by now, you'll see majority, half of their 50% of their revenue comes from the US, but they're spread out very nicely in the Asia Pacific region and in the European Middle East region and other Americas. So if you take it all into account, they're well spread and they're doing very well. So the question lies, the past, yes, they've done very well. Going forward, will they do as well as they've done in the last 4 or 5 years is the question. I do believe they are the dominant players in the market in terms of artificial intelligence, in terms of search engine, and in terms of market dominance. But there lies the other problem for Google, which is the antitrust lawsuits. There are huge segments of lawmakers in the US who feel Google has become too big. They're starting to monopolize the market, and it's time they break Google into pieces. This has happened in the past. Microsoft faced similar action. They somehow managed to steer that. But other people in the past, like the Rockefellers, did not manage to do it with Standard Oil. They were broken into pieces. This can happen to Google. So will Google lose the faith of the American lawmakers and be forced to break into pieces is something of a question mark that hangs over Google's head. But in terms of capex, in why I say there will be market leaders in AI is they've spent earmarked around $75 billion towards AI infrastructure. This is one of the most important things Google is doing and can do because of its sheer size and the amount of money it has. Something even ChatGPT will be finding it hard to do compared to what Google can do. There's been even news making that Google is looking at building its own nuclear power plant because of the amount of power demand AI is creating. One of the main problems AI has is it draws upon huge amount of power resources. It requires a lot of electricity and power, and having your own nuclear power plant can prove to be very useful and can be a game changer for you. So this is something also to take a balanced approach. There's lots of news going there. There's consistent growth in Google. There's consistent profitability in Google. Free cash flows at $74 billion, right? There's hardly any debt in Google, right? Interest coverage is exceptional. But the antitrust lawsuit and 75% dependency on ad revenue, and like I said, the disruption which is there in ad revenue, thanks to AI, is where the question lies. So finally, looking at the PE ratio of 18, which is very reasonable, the growth to PE looking at 1.26 is fabulous. Of course, the price to book shows investor confidence at being at 5.8 shows tremendous investor confidence in Google. So I do believe Google is reasonably priced at this point, maybe a little more than it should, probably a few dollars more than what you should be willing to pay. So if you see corrections in Google, will you buy? Do you buy Google in dips? I want to know. I would love to hear your comments and your feedback on this, which I will review in the next video. When I see you guys on Monday, I'll walk through these comments and see and offer my views on your views, like I did in the beginning of this video. I hope you found this video informative and entertaining as always. See you again tomorrow with another piece of information or news or an idea to share with you. Thanks for watching Be Rich today. I hope you found this informative and entertaining as always. See you tomorrow. Good night.